SMF Street Traders. This is CME put and call spread, 260 call versus the 260 put. Options expiration, SMF Street Traders, starts tomorrow morning, goes through the 13th and the 17th. We've already showed the SMF Street Traders, the monthly and the weekly bearish chart trends. So we've had a counter trend. We've moved about $35 or so or more off of that CME bottom in the equity price. And as we love to trade CME every options expiration and SMF Street Traders, you know what I'm going to be giving you the prices, but let's go through it. Here is what we're going to be looking at. 250 put down here, the low is 60 pennies. The 260 put that expires this coming Friday is $2.10. And we're going to take a look at the up and out of the money 918 call side, which is $1.90. That has gone extremely high. But here, let's move this aside. Here is the 260 put. CME closed at 262. I'm also going to be showing below the market the 250 put, as I'm going to highlight it right here. That's an August one. But more importantly is the 250 put right now is very cheap. For CME to fall $12 in a week is nothing. And let me tell you, there's 60 pennies. So let's get to work, and this is why we're excited and very enthusiastic about this September options expiration. And here's how it goes. This is the call contract right here. That was up 99 cents. It hit 750 on the high and started to fade back. Let's take a look at the imbalances between, and here's the put option down here at $2. The high was $3.30. The close was $3.50. We got down and closed toward the low. They took a $1.40 premium. You're slightly below the market and above the market on the 260 call. Now, let's do what we have been taught to do. Since we have gone higher, that 260 call was $1.10. And as I said, it actually peaked right here at $10. That is a very percentage inflated move. The $260 put, the opposite of the $260 call, as USMF Street Traders are market makers in the option pit and who understand what I'm talking about. The innocent bystander probably is very confused if you're watching the video, but you don't have to be. Sign up for that free 5-day trial and watch us. Watch us. We do the trades live every day. Anyway, so basically, we're going to look at buying this 260 put. We're totally deflated. The high was $26.53. I'm sorry. The current low is $2.10. There's a big mathematical imbalance. And as a market maker in the option pit, this isn't day trading stuff. You're not going to find it in a book or a CD. But what you will find it is you'll find it here at SMF, stockmarketfunding.com, when we're doing the live traders with the SMF MMTs that are in the SMF Street School for a year, but trading live every day. So basically, we peaked at 10. We're still inflated, and we're going to end up doing that trade. And I'll tell you once the video is over. Now, I'm going to move on so politely, SMF Street, and I'm going to put in that $250 put that just so happened to have been on 8/24. My friends, the high was 18.71. There it is. But look at the low. So it's 60 cents. We're going to be looking at trading that one. I'll give you prices after the video is over. Now, if I go to the $250 call, which is $12 in the money, SMF Street Traders. What I've done now is I've given you that $250 call, which is $12 in the money, and we close right here on CME at 262.76. As a market maker, Not a day trader in options, but understanding after 25 good hard years of trading imbalanced premiums and leading our SMF Street trading staff down the right road to success, it's all right here. Let's take a look at the mathematical imbalances and what goes into our live trading platform. That tells you what side of the market to be on. Now, let's take a look at this one right here. The low was 240. The peak was 1597. That's mathematically inflated. The last high over here, let's take a look. The last high, $12 in the money. And you know what's going to happen when you're in the money and you retrace, premium is going to come down. This side of the market so far, and it could go a little bit higher, and we can go a little bit lower in the other one. But let's look at the back half of why we're so excited. That's totally inflated. Let's take a look. That is CME. And once again, these are all the contracts right here. And the strike prices, you have them in your video, MMTs. Now, let's get over here and take a look at this wonderful. Now, this $250 put, as you know, is below the market by $12. However, let's look at the mathematical imbalances. Last time when we were down here and we were doing the CME trade, we went from $2.30 on the put options back on 8/2 when we were shorting the August down move when everyone else was bullish. We were shorting. But look what happened. The put went all the way up to $15.42. That's $13. You had 50 contracts. You made so much money you could pay for that mortgage every month. Now, while everyone else is suffering on Main Street, your earnings are much higher than the private sector. And you're a trader on SMF Street as a market maker in equities and a market maker in the option pit. Now, I'm down here at 60 pennies. That means that this side of the trade for the expiration has got a big bang, bang, bang opportunity. Should that opportunity come ourselves, this is so deflated and we reflated and deflated. I will give you the option pricings after that we conclude this one. Now, on the other side of it, in the money or out of the money, just in case there's a quick pop, this is a 270 call, which is above $8 above the market. The low was 61 pennies. Because it's out of the money call, 270, the high was 449. But let's do the math. 61 pennies to 449, mathematically, it's still imbalanced. Not only that, it pulled back and the closing price was $1.90. So off of that 449 down to this $1.90, they've already started taking some of that premium out. We'll be looking at this as a volatility in case they want to run that up. But we're so imbalanced, the chances of that happening are slim. So I'm going to give you the pricing videos on all of these strike prices. I'm going to finish this video. You'll have it. Write those prices down next, and then we will take the glory. We love options expiration. It's the best week in trading options. It's the most money made, right down to the very last day, right down to the last 10 minutes on a Friday on options expiration. These things can go, as we have done plenty. This thing could come down to 20 cents and then all of a sudden end right back up here at $5, $10. It happens every expiration, as you have witnessed.